The markets open again after the worst week since the financial crisis.
Big funds, the hedge funds.
The Dow jumping 200 points at the open this morning.
It's just a good place to put your savings.
You suddenly put them together and you say, damn it, that's what's happening.
Hello, everyone. Welcome to the Business Bubble Podcast. My name is Sam, and with me is
James. Hi, everyone. Welcome again.
yeah.
Hi,
Welcome to
Sam.
another
How have you
episode.
been?
Oh my God, it's been a
It's
roller
been a
coaster.
long time.
It's been a long time. Like I was still like watching over the weekend. I was watching our last episode again. I do that often, and I was like, oh my God, this episode was like it bangs.
Yeah,
Yeah, it bangs. Like it was really, really good. Bringing up Sam and Austin. They came to share their experience, like really detailed experience. I think we should do that more often, like bringing people, interesting people to talk about their
yeah,
experience.
definitely. That is a good idea. Yeah.
Yeah, that's a good one. Yeah. What about you? What have you been up to lately?
Nothing much, just working, just working. Yeah,
Mm,
so I guess we can probably jump into the conversations for today. What is on
yes.
our deck today?
Yes, we have a lot of interesting topics on our decks today. So we just like share a lot of interesting topic in the like we've always wanted to talk about. But there's a topic that we've touched point on our previous episode, and that's the Novo Nordisk new product, Ozempic's Novo Nordisk new product. So if you know Novo, they've been in the market bringing up innovative products over the last, five I don't know. It's been a long time, right? But this
Yeah,
product is going to revolutionize a lot of things, like in terms of a lot of stakeholders have been talking about it. Even though it's a medical product, people that in other industries, that stakeholders in other industries like airline, like transportation, logistics, like in a lot of interesting industry. Then you start wondering how does this connect?
yeah,
How does this connect? Like this is a healthcare product, then you see stakeholders from other industries like talking about it and anticipating it. So now that it's live, I think we should talk about it. It's really important that our users know about our listeners know about it. Sorry. And knowing about it is in a very interesting way because we're we're not health experts, right? We're only
yeah,
analyzing, talking about the market.
yeah,
Well, not health expert. I don't know anything about healthcare, but this time this is a product that I feel would revolutionize the stock market the same way when we had this insulin coming to the market, and you see insulin crashed a lot of existing products in the market, as in the pharmaceutical space. I think we are onto that level of innovation with this Ozempic's Novo Nordisk product. What do you think, James?
yeah, yeah, definitely. Novo Nordisk has been crushing in the stock market this year in comparison to other stocks that have been going down due to high interest rate, especially in the banking and commodity sector. Novo Nordisk has been in the news actually because of we can call it a breakthrough drug discovery on it actually started with diabetes. But first of all, let me give a context what Novo Nordisk is. Novo Nordisk is a Danish pharmaceutical company that started in 1923. That was about 100 years old as at this year. And they've been at the forefront of um, major pharmaceutical and drug breakthroughs over the past 100 years, which has contributed to humanity probably living longer. Not just Novo Nordisk, but other companies like Novo Nordisk also. But Novo Nordisk is obviously in that category. And their impact to the society has made us live about probably 10 to 20 years more, right? The average lifespan probably was 60 years old in 1923, but now fast forward to 2023, the average lifespan is like 75 to 80 years old. And that is because of the contribution of these pharmaceutical companies that have shaped humanity over the past 100 years. But Novo Nordisk has come to the prominent again, I think in 2017 and 18, when they started, when they released a drug called Ozempic. Ozempic was actually a drug for diabetes, and it was meant for that purpose. But it's also effective, and there were also side effects to it. And one of the side effects was actually people were actually losing weight while using the medication, and people were eventually using that medication for diabetes to lose weight. And Novo Nordisk saw an opportunity in that, and they had to create another drug, especially for weight loss called Wegovy. Wegovy is actually FDA approved already, and Wegovy is now Novo Nordisk's um, weight loss drug instead of Ozempic, which is still the diabetes drug, but Wegovy is currently the weight loss drug. And yeah, they've been selling like a lot of medications to the point that they don't have much supply again for this year. So because
Wow.
of the lack of supply and the increase in demand, other competitors like Eli Lilly and Pfizer are now jumping on board to create their clone of Wegovy, which is the weight loss drugs. But the weight loss drug is actually important for these companies because according to the WHO, the World Health Organization, there are about 650 million obese adults in the world and
Mm.
1.3 billion overweight adults, which means that there are more than 2 billion adults actually that are overweight or obese. And that is actually a huge market and a huge market potential for these medications. And the burden of this medication, the burden that it could remove from the society, the economic burden could be about $83 billion over the next 10 years. And that is actually by a study by Jamal Journal. And they saw that about $83 billion could be saved in healthcare costs because of this weight loss drug. And it's very important because being overweight or obesity contributes to other type of illness, or it comes with other illness as well, which is it increases the propensity for heart attack and for stroke, and also for diabetes in itself, and
Yeah.
also for even cancer, right?
Yeah.
But with this medication, we could actually save about with current demand, no, sorry, with the current supply, we could save about 1.7 million diabetes cases every year and
Wow.
350 heart attacks every year and
Wow.
300,000 strokes every year. And
Wow. That's
that can,
revolutionary.
yeah, that's revolutionary. And that could actually contribute a lot to the economy because all that all that expense that was meant to go into healthcare, into this section of the economy, all that
Yeah.
$83 billion can now
Mm.
be diversified into other things, into other more
Yeah.
productive sectors, and
Yeah.
also help the economy broad large, right? A lot of people spend a lot on
On
heart
preventing
attacks,
drugs, like a lot of preventive
preventing drugs.
drugs. Yeah.
Exactly.
And yeah, and also equipment, preventive equipment, going for specialist surgery and all of that. So that's going to like reduce the price point drastically. But I also wanted
Yeah.
to know, what do you think about the sales? So right now, Ozempic, or let's say Ozempic sells for about £179. That's in the UK, and
Yeah.
Wegovy sells for £199, right? That's still like a high-end price point, and it's just like a. So I don't know if you've seen like I'm just describing it to our users, our listeners, right? If you've seen an insulin cap or insulin tablet or insulin pen before, so this is literally something like that. It's similar to like an insulin pen. So, for example, the Wegovy capsule, the Wegovy um drug is just 2.4 mg, 2.4 milligrams, right? The Ozempic is 1 milligram. So it means that it's not something that would like last long, depending on you'd have to like
Yeah.
buy multiple of that. And one of it costs about £200 to use. So that's a price point beyond the average, will I say, yeah, it has a price point cap. So do you think we're going to, and right now, based on the report we've seen that they've made about $11 billion in sales, right, since
Yeah.
2022, since when it started experimentation and went to the market. That's a lot of money, right? That means that there are a lot of things there. And even all of this stock right now, especially for Ozempic, is currently out of stock in almost
Yeah.
every store, currently out of stock. So do you think, based on the market adoption of this product, we're going to see like a reduced price point in the coming, is there a possibility of seeing it like a reduced price point in the coming months? Because this is something that literally happened with insulin when we're trying to use insulin drugs as well. Like right now, insulin prices have like gone down. I know it's still a lot higher in the US, but based on compared to the starting when it started, right, it has gone down. Do you think we're going to see like a reduced price point for this in this market?
Oh, definitely. I mean, and I'm not saying that out of context, but I think something about unit economics and mass production and associated with every technology is that it becomes cheaper and better and also smaller. And we could actually see that happening to Wegovy or the other products coming up with from Eli Lilly and from Pfizer. The reason is that as they'll be scaling up production, other producers like Pfizer would come on board. Eli Lilly has started already selling, even if it's not FDA approval, they are still allowed to sell. And Pfizer and other Johnson and Johnson, they'll also come up with theirs, and that competition will create an opportunity for prices to come lower, and we could see that price point becoming $70 or $50 eventually, and eventually $30, or eventually even cheaper than that. And that will even have much impact on the healthcare burden costs in the society. So
Mm.
I think it's inevitable that the price point would come down. It's really inevitable. And also, before we proceed to the next conversation, on the part of insurance and healthcare insurance, it could also have dramatic impact because healthcare insurance probably wouldn't might not probably might not actually be cheaper, but the healthcare insurance company would make sure Wegovy is associated in every insurance cost, because that would mean they could save money. If people use Wegovy, it means these insurance companies could save money on other associated related diseases like stroke, heart attacks, and diabetes and cancer, which has higher healthcare cost implication. And well, that could be a turning point in the healthcare insurance industry to be
Yeah,
even more profitable.
100%. I 100% agree with that. So it's meaning it's reducing the premium, like the premium on healthcare insurance. That's good. I think a follow-up conversation we should have, maybe on our next episode, is to go do a deep dive on the patents, because I would love to know how, right now it's major players in the pharmaceutical space that are coming on board with this. But I would like to know how startups or like smaller pharmaceutical companies are going to like looking to play in this field are coming on board. So we like to like do a dive on their patents to know how available their patent is, because I know these are like heavily patented product, right? Good.
Yeah.
Yeah. So let's check. Let's do our research. I will get back to our listeners on that. Yeah, thank you for that. Thank you for your succinct analysis on that. That's gives a very clear overview. The next topic we want to like dive into is just to talk about the public market performance. That's the Q3 performance. So currently we receive a report of Q3 performance. But before we dive into that, I read a report today from Axios, talking about the participation. I think this might preempt what you're about to say, James. So the Federal Reserve published like a survey on consumer finances and discovered that Americans or American household, right? That's in 2022. You've got 58% of American household owned stock either directly or indirectly. So this is a record. That's the highest record that's the highest number that has been recorded for American household. That's literally more than half of American household are participating in the stock market. And this was like tied to the boom that happened during COVID, benefits, money, and all of that.
Yeah.
So, and also, introduction of some product like Robinhood, E-Trade, and the likes that made retail investors give them ability to like participate in the stock market. Although I believe many of like lots of the gains that was made during this period has been like wiped out over the last couple of quarters, but still it's something that spells a positive time for US stock market, meaning like participation from like different cadres of investors and different cadres of like American household. So I think that's just something like worth mentioning. So do you want to talk more about the public market performance in Q3, please?
Yeah. Yeah, I think first of all, like you mentioned, participation or in the stock market and in public market from Americans is the highest it has been in um historically, which is which is probably significant of how people are becoming more entangled into financial market. It could be a warning signal or it could be a good development. We should not also forget that most of that correlation of Americans investing in the public market is also tied to their 401k and other type of packages, meaning that a lot of American citizens still don't have any idea that they are even investing in the stock market, but
Mm,
indirectly through their 401k they are investing in the stock market. And
mm,
while the stock market this year has been really, really, really volatile, at the same time very strong, but currently I think we could be heading towards a recession. And from the Q3 performance, it actually shows why we could be heading towards a recession because first of all, mortgage its highest it has been since 2008. It's now at 8%. I think it was currently at 2% in 2021. Right now it's at 8%. Credit card interest rate as it is highest record also since 2008. Car loan interest rate as it is highest record since 2001. Oil price have jumped the highest since the past 6 months. So oil price is probably going towards 90 or probably 80 and above towards 90 maybe. Some JP Morgan analysts are calling for oil price that could hit $200 a barrel, which is really, really huge. And if that happens, and there are many reasons why oil price can even still go higher because of geopolitical instability in different blocks in the world, in the Middle East with Israel and Palestine, in still Russia and Ukraine, and other involvement from Saudi Arabia with price cuts and from OPEC generally can actually affect oil price going up, meaning that if meaning that things will actually become even expensive if energy becomes more expensive. China planning a $137 billion stimulus also could have impact on inflation writ large. And surprisingly, bonds also went to like 4% last month, and when it went down again to like 3%, but now it's back to like 4% again. Meaning that a lot of people don't have confidence in the stock market and public market generally. And you've seen a lot of money that has gone into cash. I don't know if you've been on Bloomberg for the past 3 days, but for the past 3 days, on probably on a lot of Bloomberg publications, they've been saying that, oh, everybody's as running to cash, everybody's running into cash. Meaning it's not a good thing because when people run into cash, they run into cash because the dollar becomes expensive. And it's due to all of these factors. And they run to cash for protection, basically, right? So I think Q3 performance wasn't promising for also even car companies, like Ford, Stellantis, which owns Peugeot, Ram, and other car brands, and also Tesla. Even Tesla missed some expectations, but that is actually a reflection of how the consumer is actually doing right now because of high interest rates since 2001, or high credit card interest rates since 2001, and high auto loan interest rates since 2000 and since I think since 2002, right? So
Yeah.
these are really major factors that are affecting the stock market and the economy writ large, and possibility of a recession is very, very prominent. And I
Yeah.
know we've been talking about the IPO market for the past few months. Well, the IPO market has been disappointing because a lot of investors from the Series D round or from the last stage of funding probably jump on board to just cash out on the IPO stage
Yeah.
and left the bag holding for retail investors. So yes, so this is actually my take on Q3 performance. I didn't talk much on Q3 performance because I talk on the outcome of what Q3 performance was telling us generally that
Yeah.
and that is we are gonna have a recession. So that's
Yeah,
it.
but yeah, I don't 100% agree on that because I feel the stock market, the public market is actually very resilient, and we've also got different players that, you know, correlation is like there are a lot of industries, so which make it like, negative, like there's like a negative correlation across different industries. And also I understand that there are things that like make correlation, being like the same correlation, positive correlation along the lines. Like, for example, the high interest rates affect every industry and affect every market. But for example, right now we're seeing energy stocks like that's something I feel like would keep the public markets resilient. That we also just mentioned some updates in the healthcare industry, and I feel the same way there was a healthcare industry rally during COVID, right? I feel we're also going to have something similar, which can also make the like public market resistance. So I feel like we can also pick some winners here. Like if the recession call is something that has been going on since late last year, but yeah, it's still 2023. We're literally here now, and there's still no recession, right? There's still no recession yet. So I don't feel confident that there's going to be a recession. I feel that we're going to like walk this for through. So maybe you want to also highlight some positives, yeah, so we don't just spell dooms to our listeners.
Yeah, I think it's hard for me to see positive. Okay, I think the positive could be that stocks and public equities would become cheaper, and and that is actually a very good buying opportunities for anybody that is starting out to invest, first time investor in the stock market, because public equities will probably be much cheaper and you could have the opportunity to buy Meta or Tesla at a lower valuation. And within the next 6 to 12 months, that could be a good thing. And by the way, recessions are not a bad thing. Recessions are actually a cleansing of the system, and that is something that happens cyclical. What is a bad thing you would say is inflation, hyperinflation, and economic crisis or economic depression, like the 2008 financial crash. These are these are economic crisis or financial crisis, but recession are more healthy because recession are basically a cleansing of the system, meaning and it's something we we typically have every cycle, every 7 years thereabout. But we've not had a recession since 2008 and 9. That's like about 15 years ago. We've not really had a recession. So we were meant to have a recession a couple of times this decade, but we've been sustained by low interest rate or 0% interest rate, to be honest. So I think people shouldn't really see recession as something bad, but as something that is part of the cycle, and it's something that is meant to happen as a way to cleanse financial market. And that's the only way financial market can function properly. That's if we have recessions. So it's not a bad thing in itself.
Okay. Thank you for the soft landing. Yeah. So I know recession is not a bad thing, but this the nature of this recession, because right now we've got like some major European markets in recession already. So if the US goes into recession, it means that it's going to spell doom for a lot of emerging markets and also for a lot of emerging markets, right? The UE, Germany, Netherlands are already like they've already announced in recession. So Canada is also having problems with their economy. So that's what I just feel. I feel like this recession is going to be a long one if we enter it. Like it will be something that will be hard to pull out. But yeah, this is a developing story, something we just keep talking about. We've been talking about since the day one of this episode.
Yeah.
It's a conversation that we'll keep talking about. So yeah, we'll keep being on the lookout, churning out stories and interesting pointers and insights that could help our listeners. I think our final topic that we just want to touch on is because we all have ties. Like James and I, we have ties to Africa, and we always try to talk about Africa on each episode of the podcast, just to like talk about things happening. So right now we've got some startup failure happening in the market, and they're a bit consistent, right? Startup failure, startup failure are not like a bad thing. They are more like a show of maturity in the market, right? When the market is
Yeah.
maturing, and even due to the current economic situation globally, it's normal. Like it's normal to see startup failure. In fact, I'm sure the numbers are high everywhere. It's also in the US, in Europe, in the UK. A lot of companies are closing down, which is like a mirror of the current current market right now. So we just want to talk about some of these startups and mention them, maybe how they could have seen it coming, how much they raised, and what are the major reasons why they packed up. So, James, you want to go first?
I think you can. I
Uh,
can probably
just go.
touch on some, but I think you should touch on the major
Okay.
ones. Yeah.
Yeah, so the major ones, I'm going to touch up on the ones that I raised money, like more than, say, $20 million in funding. So we've got Dash. Dash is a Ghanaian fintech startup that raised a total of $86.1 million in seed funding. It shut down after 5 years. And this one was actually a bad one because I saw the conversation was really hot on Twitter. Like even some of the investors came out to like call them out as well, call the founder out. So it was a case of bad financial management and lies on user accounts. Like almost like it's a regular thing that people pop up their user accounts, like tons of active users, and they're not able to like sift out the original user. I feel like it's a deliberate mistake that a lot of founders make. But I don't want to blame the bad management entirely on the founder because there were also some regulatory issues, right? There was a time the uh, Ghanaian Apex Bank, revoked their license at the time, so they weren't able to do much of operations in Ghana. And I think they moved operations to Nigeria or other West African countries, but the margin there or the competition they couldn't help them to make a lot of progress. So I feel the major reason for this company going under was the fact that was a regulatory risk. Fine, the bad financial management was there, but maybe they weren't able to pivot um, as early enough as they should. Another startup I wanted to talk about is 54 Gene. So 54 Gene was like a poster child for Nigeria and the healthcare space during COVID, right? They were a genomic startups. So originally their mission was to like build a data bank of genome of maybe I think of Africans, then be able to map that genome globally. So anyone looking for a genome bank, trying to check for example, pharmaceutical companies trying to test a new product, they can test it against the genome, test it against their genome bank. So it's easier for companies to be able to scale fast because they already have a genome bank and they're able to test their product uh on Africa's genome bank. So that's something that is not like a popular thing and it's a really hard thing getting it off the ground. But during COVID, they pivoted into making PPEs and making some necessary products for COVID-19, which helped cushion the effect of COVID-19 in Nigeria. So I think after COVID, they weren't able to pivot. They wanted to pivot back, but the main cause for their closing down was due to they weren't able to achieve profitability. So they raised about $40 million, which was a lot of money, and they were successful to an extent. But after COVID, I think that's the major reason why the company failed. I heard that one of the founders have gone back to start another company with the original vision of building a genomic data bank in Africa, which we're wishing well and we're hoping it succeed. Another company is called Sandy. Sandy is based in Kenya, Nairobi, Kenya, is a logistics startups, and they raised about $30 million. Logistics is a very, very hard nut to crack here in Africa because the lot of you know the lot a lot of orders to cross and a lot of things to focus on. So they weren't able to get to profitability on time, and I think that's the major reason why the company folded up. And another one, the last one I'm gonna touch on is Zumi, is an e-grocery startup. It failed because they couldn't raise additional funding. I think it's they're trying to build a version of Instacart for Nigeria. They raised about $10 million, but they weren't able to hit profitability and they weren't able to raise. That's why they closed down. So e-grocery startup, the couple of e-grocery startups in Nigeria that have failed, and they failed really woefully, right? Because it's a business you have to put money into, a lot of venture capital into to be able to, it works on unit economics, and unit economics has to make sense in terms of scale. If you're not able to scale very fast, then there's no point in doing the business, right? So I think those are the high profile ones, $10 million and above. James, do you want to talk about I think we've
So I wanted to say that Laser Pay also went down, and they actually raised $1 million in 2021 or 2021, 2022, thereabout, and they didn't really succeed in the crypto space. And I think all the failures of startups generally prove one thing, which is companies have reached a maturity in the economy, meaning that they are no more building apps, they are building businesses, and some of them couldn't really build these businesses, or the climate wasn't favorable for them. And it kind of like help us see what sector, what verticals, where to look for in the economy in relation to Africa and African economies where things could actually work. And so it could be there are a lot of lessons learned from startup failing in Africa, and those lessons could be stepping stone to build something solid in the African economy. right? So I think that's like my take on the African startup space.
Great, great. Thank you very much. So, I think that's a wrap. That's a wrap on the podcast. So, what are the activities or events you're looking forward to in the coming weeks before our next episode? For me, I think a lot of like okay, right now the event that a lot of people have been raving about. I started a call with Lutula. I was just we were just talking about it. Is the GITEX in Dubai.
Oh, Gartex, yeah.
Yeah, so I've got a couple of friends there, seeing pictures from Jacques, just wondering, oh my God, when am I going to be able to attend Jacques conference? Hopefully, I get to attend next year. I
Yep.
get all of my visa and everything's early enough to be able to attend next year. Yeah, so another one is this a startup grind event happening in London on the 31st of October. That's on Halloween Day. So we're having an event for commemorating Black History Month. I'm the one hosting the event. Like I'm the moderator
Oh, great.
hosting the panel. Yeah, so it's really, really interesting. Like, so I'm going to be
Yeah.
hosting a lot of interesting folks and having conversation with them about opportunities and discussing opportunities and also challenges they faced being a Black founder and an investor as well. So it's going to be interesting. So if you're listening to this and you're based in London or you're listening before October 31st, so I'd appreciate it would be great for you to attend, right? Get to
Yeah.
startupgrind.com/London and get a ticket. And yeah, those are the two events that are like on my radar. I'm just catching up on. What about you? What events are?
From my end, there is African Startup Festival. It's
Mm,
coming up very soon in Lagos. Yeah, I think that is like in November. That is like one event I'm looking forward to. And I'm very sure there are other events that will be happening towards the end of the year, December, end of
yeah,
November. So I'm looking
yeah,
forward to attending many conferences this season.
yeah. Great one. Maybe we can highlight some of all of this event on our next episode as well.
Yeah,
So I think that's
definitely.
everything. That's everything on this episode. So we're going to be putting this episode on Spotify, on Apple Podcasts, or Google Podcast, and on YouTube. So we've opened a YouTube channel. We're going to be putting all of our past episodes on YouTube as well. So you can drop a comment for us when you listen to this podcast. Let us know your feedback, and we'll also move on your feedback. So that's the end of the podcast, and we're shouting out to the rest of the team. We're not growing a team larger. We're not going into a larger team. We're now like a team of four. Yeah, shout out to Esinam Yevu and shout out to Toby Agbeja. So we bringing a lot of interesting things in the coming weeks. So yeah, you're going to be seeing their contributions more and more. So thank you for listening.
Yeah, thank you guys for listening. Have a good week.
Yeah.